Most Bitcoin holders are still broke, even after years of stacking sats. Following the news and cutting themselves early, their financial reality hasn't changed much. This is surprising considering Bitcoin has outperformed nearly every asset class over the last decade. So what's going on? This video explores 5 core reasons why most people holding Bitcoin still haven't built wealth, and what disguises the minority who do. The final reason in this list is something rarely discussed, yet it might be the single biggest roadblock to long-term success. The first issue starts with a basic misunderstanding. Many people who don't truly own their own Bitcoin and they believe they are. A large number of holders leave their BTC on centralized exchanges. It's convenient. Log in, see a balance and done. But the hard truth is, assets held this way are only as secure as the platform allows. If the platform goes down, gets hacked or collapses, the balance can disappear instantly. This isn't theory, it has happened. Just look at Mt. Gox, FTX, Celsius, BlockFi. Each collapse left thousands with empty wallets and shattered trust. Ownership in Bitcoin isn't about balance on screens, it's about controlling private keys. Without those keys, there's no guarantee that the asset is truly accessible. Those who take time to learn about cold wallets, multi-sig and proper custody are the ones who avoid catastrophic losses. And unfortunately, a lack of proper custody is one of the reasons why many Bitcoin holders never truly build long-term financial stability. The second reason is more psychological than technical. Many people who get Bitcoin with emotion, excitement, fear of missing out, or social pressure. The result is random buying behavior without any consistent plan. During price spikes, purchases often surge, only to stop entirely when markets cool down. Some end up selling prematurely or holding amounts so small that barely even move the needle. This approach is chaos reactive and rarely builds meaningful wealth. Those who take time and a different route, setting up automated recurring buys, committing on a time-based strategy and ignoring short-term noise tend to accumulate more over time. It's the same principle behind long-term investing in any asset. Consistency beats timing. Without a consistent strategy, most holders remain exposed to their own emotion, which ultimately stalls their progress. There's also a widespread mismatch between expectations and actual exposure. Many claim to believe in Bitcoin long term, but hold very small amounts, often just enough to say they're in. These amounts, while symbolically important, don't move the needle in terms of financial freedom. For example, holding 0.00001 Bitcoin is a solid start, but even if it reaches $1 million, that would translate to $10, not life-changing. Building wealth requires commitment, and that includes deciding what amount of exposure could meaningfully change one's financial situation. It doesn't mean taking unnecessary risk or over-leveraging. For those who have benefited most, often had targets and worked systematically towards them. By contrast, passive holders with no goal often stall out, not because Bitcoin failed, but because their own position was never big enough to begin with. Even those who accumulate more serious amounts often struggle with an invisible barrier, the fiat mindset. Despite advocating for decentralization or sound money, many still think entirely in fiat terms, pounds or dollars, focusing on the price charts or planning to sell during the next big pump. This often creates friction. It leads to selling too early, hesitating during dips, and constantly comparing Bitcoin to traditional investments. But Bitcoin isn't just another asset, it's a shift in how value is stored and measured. Some of the wealthiest Bitcoin holders stopped thinking in fiat altogether. They started pricing goods and services in sats, tracking net worth in Bitcoin, and planning around long-term cycles rather than short-term market moves. This shift in mindset doesn't happen overnight, but for those who make it, the path to wealth and peace of mind becomes clearer. For most, the inability to break free from the fiat thinking holds them back far more than volatility ever did. Finally, there's one issue that has nothing to do with Bitcoin and everything with lifestyle. A significant number of Bitcoin holders maintain high consumption habits. Expensive rent, frequent upgrades, lifestyle creep, all of it eats into disposable income that could otherwise be used to stack. Even with good intentions, it could be difficult to accumulate meaningful wealth when every spare dollar is spoken for. Bitcoin is a savings technology, but it still depends on one thing: actual saving. Those who free up capital and cut unnecessary expenses and live below the means tend to stack more and hold longer. Over time, that adds up in a way short-term speculation never can. For many, the real reason they remain poor isn't Bitcoin related at all. It's the quiet drain of lifestyle inflation that prevents any meaningful financial transaction. The people who truly benefit from Bitcoin often live modestly today, so they don't have to tomorrow. The individuals who thrive are those who take self-custody seriously, build a stacking plan, accumulate enough to make a difference, shift their mindset, and live intentionally. Wealth in Bitcoin is earned not just through market performance, but also personal choices. And that's what sets the successful few apart from the struggling majority.